Okay, now in this video, we will look at the scenario 2 of finance reporting FR paper from March, June 2021 exams and first look at the requirements as per our practice and do make your practice it as well. Calculate the goodwill arising on the acquisition of silver company. Prepare the consolidated statement of profit and loss for gold company for the year ended 30th September 2002. And then we have here the consolidated statement of the both company. Okay, and that's it. We will look at this part late SOPL later on. First, just on 1st January, okay, on 1st January, what gold company acquired 90% of the 16 million equity share capital of silver company. Gold company issued 3 new shares in exchange for every 5 shares it acquired in silver company. Okay. Additionally, gold company will pay further consideration on 31st December 2002 of 2.42 per share acquired. Okay. Gold company cost of capital is 10% per annum and the discount factor at 10% for 1 year is 0.9091 at the date of acquisition. Shares in gold company and silver company had a fair value of 8 and 3.50 respectively. Statement of profit or loss for the year ended 30th September X2. As you can see, gold company 103, 360 and 60,800 cost of sales 81,920, 41,600 gross profit 21,440, 19,200 distribution cost. You can see 2,560 and 2,980 and admin expensive 6,080, 3,740. Investment is 800 and 0. Finance cost 672 and 0. PBT profit before tax 12,928, 12,480. Income tax expense 4,480 and 2,560. Profit for the year is 8,448 and 9,290. Following information is relevant. At 1st October 2000 X1, the retained earning of the silver company were 56 million. At the date of acquisition, the fair value of silver company assets were equal to their carrying amount with the exception of 2 items. Okay. Uh, so firstly, the consideration consists of, let us do the workings parallel. We have looked at the consideration part. So firstly, what we will do the workings parallel, and then we will work on the goodwill and statement of profit or loss at the other end. So firstly, my first heading will be related to consideration. So firstly, the deferred consideration we will have. Okay, what it will give, how we get it, as you can see, is equal to sum. So we acquired 90%, so 0.90 multiply by how much shares we took, 16,000 multiply by what was the purchase price, $2.42. Okay, multiply the discount rate for the deferred consideration was given into the scenario was 0.9091. How much we will get? Oh, that's it. Now, somewhere error into the formula. Just a second. 0.9 multiplied by, yeah, here it is. It's 31,680.32 That's fine. Okay, now next one is related to shares is equal to sum. Now the share exchange 0.90 multiply by 16,000 shares, and it was exchange of 3 to 5 shares between the both companies. Multiply by the share exchange was consist of 8.40. What we will get 70. It's saying 72,576. Just a second. 0.9 multiplied by 16,000 into 3 divided by 5. Just a second. Now, just 0.90 multiplied by how much? How much? 16,000 shares multiplied by 3 divided by 5. Bracket close. Multiply by 8.4. 72,576. 16,000 into 3 divided by 5 into 8.40, 69,120 is the answer by the examiner, but I'm getting 72,576. So just to I'm taking it as 69,120 just to match answer with examiner. It's 69,120, and we will take the total is equal to sum for total. It's gonna be 100,800, right? And then we will take the value. Now, next working is related to the NCI, non-controlling interest. So non-controlling interest will be very simple calculation. It has is equal to sum 0.10 multiply by 16,000 multiply by 3.5. We will get 5,600. Both working done. Now moving to the other side. Uh, Before doing it further, we already noted that the opening retained earning was 56 million, right? At the date of acquisition, the fair value of the silver company assets were equal to their carrying amount, with the exception of two items. An item of plant had a fair value of 2.6 million above its carrying amount. The remaining life of plant at the date of acquisition was 3 years. Depreciation is charged to cost of sales. Okay. Silver company had a contingent liability which gold company estimated to have a fair value of 850,000. This has not changed as at 30th September 2000 X2. So let's go for it. Very simple. Very simple. Simply just noting it over in here. Let's go and do it now. Okay. Fair value adjustments. Property, plant and equipment 2600, and contingent liability will be negative 850. Okay. Anything else? No. Now move to the other part of the question. Gold company policy to value the NCI at fair value at the date of acquisition for the silver company share price that can be represented as fair value of the share held by the NCI. We already done this. Now sales from gold company to silver company in post acquisition period had a consistency been 600,000 per month. Gold company made a markup on cost of 25% on these sales. Silver company had 1.2 million of this goods in inventory as at 30th September 2002. So for this, what we will do, unrealized profit working, and let's do it now. Intercompany and unrealized profit post acquisition sales. As we can see, we acquired the company after the 3 months. So the sales are 2600. 2600, sorry, 600 into 9 is 5200. So the unrealized profit will be, as we look from the scenario, 1200 into 25 divided by 125, we get 240. Now another working, fair value adjustment on plant, fair value adjustment, depreciation on plant. So what it gonna be? Very simple. Its value was 2600. Okay. Life was 3 years, and obviously we will apportion it over 9 months. 9 divided by 12, 650. Okay. Then let's look at the another adjustment. Um, Gold company investment income is a dividend received from its investment in a 40% owned associate, which it has held for several years. The associate made a profit of how much? 3 million for the year ended 30th September X2 2000 X2. So let's look at it. Just a second. Yeah. Okay, so what we will do, share of profit from associate is equal to what was the profit? 1200, right? Sorry, 3000. We have 3 million. 3000 into 40%, 1200, right? Now, next one, next working, but which working we have next over here? Let's look at it. Yeah, 6-1. On 1st October 2000 X1, gold company issued 100,000 dollar 106% convertible loan note at par value with interest payable annually in areas over a 5 years term. The equivalent rate for NCI loan note was 8%. Gold company has recorded the loan notes as a liability at par value and charge the annual 6% interest to finance cost. Discount factors in year 5, 6%, 0.7478%, 0.681, 6%, 4.212, 8%, 3,993. No goodwill charge, profit accrue evenly throughout the year. That's it. Now, that means we have to do the last working over here. Last working, convertible loan. And we have to calculate the liability component. Alright, so here I am writing it as 0. Here I'll be writing as discount factor 8% and finance dollar dollar deposit. My headings. Now, firstly, the interest is equal to 10,000 into 6%. I'll get 600. Discount factor at 8%, we will take it 8% as stated in the question. 3.993 is equal to this multiplied with this 2395.8. That's now the principal amount. What was that? 10,000. 0.681 is equal to 10,000 into 0.681. 6810. Done. Sum. Done. Plus 9205.8. Now, in the end, interest charge to profit or loss. That was given in the question 736. Or let me give you the calculation how I did that. Is equal to 9206 multiplied by 8%, 0.8 is equal to 9206 multiplied by 0.08. 736.48 interest already charged. Minus 600. So obviously, what's the difference we need to charge? Equal to sum. Uh-oh. Sorry, is equal to sum. 136.48. Last two things which we have to calculate. Deferred cash consideration. It's simply is equal to 31680 multiply by 10% for the NCF, by the way, into 9 divided by 12. Now we computed it for NCF. 2376. Now the NCI. Silver profit for the year is equal to 9920 multiply by over the 9 months 7440. Fair value depreciation. What we can do is equal to minus and depreciation where it is fair value depreciation here it is minus 650. Okay, so what we will get is equal to 7440 minus 650. Oh god, is equal to oh is equal to sum bracket open now 6790. So NCI share 10% is equal to sum this multiply by 10%. Done with all the workings. Now what we have to do, we have to do complete the goodwill, right? Uh, let's do it now. All right now, so what we'll do now, as I said, we have to compute the goodwill. Okay, so simply deferred cash consideration. We already did the computation, so just link. So just link now. Here it is. Then what we have shares is equal to move up. Come on, fast. 69120, right, is equal to sum. Although we had the total, but just to show them 108, 100, 800. Okay, then we have NCI. Let's go in. Link. See how fast it efficient it is now. Uh, after NCI, what we have to do? Less fair value of net asset at acquisition, right? Equity shares, 16,000. Okay. Although we can copy it from the question as well. Retain earnings at 1st October X1. We read in the question that it was 56,000. Okay. Then retain earning from 1st October X1 to January X2. It is equal to how much? 9920 for 3 months. We get 2480. So the total will be is equal to sum 58,480. Okay. Then fair value adjustment. Plant that can be copied as well. Linked as well from above. Fair value adjustment plant 650. Contingent liability. I am writing in short. It was minus. We can link it as well, but I am just typing minus 850. Anything else? Anything else? Anything else? No. So what we will do here is just do the apply the total of these three, which I did in earlier. No. Yeah, is equal to sum. Now 156. What I'll get 106,400. Now just here I'm taking it as 850 over here, and because I have to deduct all from here, what I'll do is equal to minus and sum and drag them all. Now is equal to this plus this plus this plus this plus this minus this. How much? 132,760. 16,056,2,480. Oh, sorry for that. Is equal to 16,000 plus 58,480 plus 650 minus 850. Now see how much I get. 74,280. Just take it in negative over here. Oh, oh, sorry, so 16 plus 58, right, plus 650 minus 850. What it is that? 74 280, right? 74 280. So what I'll be doing? I'll be doing it like this is equal to 100, 106 400 minus this. I'll get my goodwill. Goodwill, right? Just to not scrolling down further, I write at the right side of the screen, but you should do it in your exam. So by scrolling it down. Now, goodwill done. Okay. Now finally, to write less, I'm just writing the SOPL over here, Consolidated Statement of Profit or Loss, and other comprehensive income. 103, 360 plus 60,800 minus 5,400 related to the intra-group trading, we will get 143,560. Then cost of sales, we already did detail working on it, 819920 of 41600. By the way, it's for the 9 months, okay? Uh, in the same way, 9 divided by 12 minus 5,400 intra-group trading plus 240 plus 650. We already did the workings. You can interlink them as well. 1008,610. We will get gross profit, which will be 34,950. Okay, then distribution cost quite similar. 2560 into 9 divided by 12, nothing else. We will get how much? 4795. Okay, then admin expenses, where are they? 6080 3740 into 9 divided by 12, and what we will get? 8885. Okay, share of profit from associate, 3000 into 40%, 1200. So finance cost, what was that? 672 plus 136, which we did in the working, related to the component liability, plus 2376. We will get 3184. All the workings we did. Okay. Finally, we will get PBT, profit before taxation, which is 19,284, and then income tax expense 4480 plus 2560 into 9 divided by 12. Simply, income tax is 6,400. Profit for the year, or you can say profit after tax, 12,886. Okay, 12,886. Now finally, profit attributable to owner of parent company, owner of parent company. That will be our balancing figure. What is the NCI? Question is that 679. What was the total profit? 12,886. 12,886 minus 679. Go up, we will get 12,207. Simple. That's how you had to do this question. I hope you got it now. And that's the end of this question. I'll see you next time. So, bye.